I was going to ask you, when you look at the demand forecasts, what strikes you as the biggest driver? I know a lot of people gravitate towards electric vehicles. Um, Others say, no, it's just the decarbonization trend in general. Back in the 2000s, it was urbanization that really drove that in large number. What strikes you as the key drivers today, Willem?
It's all of that, and now include AI.
AI, energy
Well,
demand.
yeah.
Yeah.
If you do a Google search, takes a lot less energy than if you do an AI related search. So there's an awful lot of copper will be needed for the NVIDIAs of this world, for all the data centers. And it's all coming together. It's just a perfect storm. It's a perfect storm developing for commodity investors like us, because you get shortages, just supply and demand. But then you have the debasement of currency. So many investors, also general investors, are starting to flee towards commodities because there's so much value to be found there. Then you have the geopolitical tension where commodities are becoming almost weaponized. So the US weaponized the dollar, but you could say China and the BRICS are weaponizing gold and commodities. So that's also helpful. And then we had this 40-year period of declining interest rates and declining inflation. We broke out of that 40-year downtrend. We're at the start of a new uptrend of higher interest rates, higher inflation. Inflation is coming down now, but it's not coming down to zero, and expect the next leg up for inflation to happen because of the higher energy prices and the higher commodity prices. So it's very hard. And I know we as commodity investors, resource investors, are all children of the bear market. We've suffered so much pain in the last 15 years. So really, people in the industry, even the experts, can't see the upside anymore. Don't be surprised that we could enter a bull market in commodities, which could take decades.
Real quick break here, guys. If you are a mining investor, you are without question familiar with the Golden Triangle region in British Columbia. This is one of the most prolific mining regions in the world due to its vast deposits of gold, silver, and copper. Now, for the last 4 years, Dolly Varden Silver has been busy expanding their high-grade silver deposit in the Triangle, and they are backed by some of the smartest investors in the silver business, including the legendary Eric Sprott, Hecla Mining, US Global Investors, Fidelity, Delbrook Capital, Sprott Resource Corp, and more. If you are curious why the smartest money in the silver business is cozying up to Dolly Varden Silver, then hit the link beneath this video. Now, we have something different today, which is these sort of digital governments. And I mean the major tech corporations who operate almost like their own entities, complete with multi-billion-dollar defense budgets and all of it. And I think if you were Jensen Huang, right, CEO of NVIDIA, or Elon Musk, right, Tesla, and you were looking at the politicians fumble the ball when it came to securing supply for the future, you might just get proactive and take action into your own hands. And well, companies like, is it Cobalt, right? It's Richard Branson and Bill Gates and a few others that are investing quite aggressively in copper and cobalt, specifically in Zambia, I believe. But would you expect more marriage of like quasi Silicon Valley meets the mining sector?
Well, we've seen the first deals in which end users like General Motors or Tesla are starting to invest very early stage in mining projects. We've seen that with Talon for nickel, seen with a few copper projects. So the whole environment is changing, and we needed to find funding outside the traditional funding centers. You know, at the bottom of this bear market a few years back, we were one of the last few funds still willing to invest into early stage exploration. And we really need new kinds of money and funding entering this market, because we need to find so many new resources, and to build a new mine, we'll know it takes at least 7 years, but often takes 17 years if you want to open a big porphyry copper mine. So we need the help of end users, and we've been traveling to Canada for 20 years. And when we were at PDAC in March in Toronto, we were contacted by the Dutch embassy because they wanted to talk with us about critical metals. In the last 20 years, we never heard from the Dutch government. And now everybody's starting to wake up. Something needs to be done. And they were asking us questions. How can we help to get more funding for the resource markets? But these are all very... It will take time for governments to change their approach, and the West is a bit they're scared now because they understand China owns 70 to 90% of not of the mines but of the production and the refineries for all the critical metals. We can't build that in a few years in the West.
So how, if an investor is looking for copper exposure right now, and how would you begin to make those decisions of capital allocation?
It's actually very simple. When you're a general investor, look, we have 2,000 high net worth clients, and they can invest with us from 50K onwards. And then we look for the best project. But if you're just a retail investor, you just buy the COPX, which is an ETF. It's a basket of copper equities. You'll do very well. It already had a nice run, but it comes from a low base. So we also ourselves use a lot of ETFs. Just buy the basket. You know, if the silver market is on fire, just buy the basket. If the uranium market is on fire, just buy the basket. Just buy the ETF. And the ETF space has been so well developed now. There are so many ETFs to choose from. We even bought a hydrogen ETF this week because hydrogen has seen the end of a very long bear market, in our opinion. So that's the best way to play. Don't spend too much time researching all the individual companies, and don't think you should be always invested in junior exploration market. Is often much safer just to buy a basket of producers.